The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 2nd, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today, folks. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. So let's start off by taking a look at one of our beliefs, at least one of my beliefs, and that belief is that, folks, beliefs have the power to create and the power to destroy. We have the awesome ability to take any experience of our life and create a meaning that either empowers you or disempowers you. One could literally save your life. I consider that to be the empowering belief. I've come to realize, folks, that all of my past failures and frustrations, and there's many out there, all of them were actually laying the foundation for the understandings that have created a newer level of life that I enjoy and each of us can enjoy out there. That's the beautiful of belief systems. We can or cannot do what we consider possible or impossible, folks. It is rarely a function of our true capability. It's just simply a function of our beliefs about who we are. I say, destroy those disempowering beliefs. We don't need them. No one needs them. There's no disempowering beliefs about this market. Right now, you've got the Dow trading up 88 points out at 14,661. Composite up 25, out at 32.65. The S&P up 10, 1571, 1576. Not that much further away, just about another 6 points, and it'll be there. Russell 2000 up 4, almost 5 points right now. Trade out at 943. Google up 4, Apple up 6, Microsoft up 16 ticks, Intel up 8 ticks, Cisco up 17. Leading the charge to the upside here this morning, you've got DaVita Healthcare up $7.14. That's up a nice healthy 6% out there. Humana Inc., HUM is the ticker symbol. They're up 9%, up about $6.50. Apple just behind them, only up 1.5%. United Healthcare up 8%, $4.78 out there. Regeneron Pharmaceuticals up a couple of percent, up 4 points. Google up 4. You've got WellCare Health up 3.33, and the Obagi Medical, OMPI, they're up 16%, and eHealth. We're going to go take a look at that. Meant to do that during the first hour, just never got to it. EHTH, that's up 17%. That's the leader percentage-wise with inside the dollar movers to the upside. To the downside here, you've got the NASDAQ OMX Group, NDAQ. They're off about 9% this morning. That is the downgrade alert, trading down about $3. You've got Alaska Air Group. They're down $1.65. Rackspace off $1.51. The Gold Spiders Trust GLD off 1%, off $1.60 this morning. Hewlett Packard, HPQ, they're down about a buck out here. Delta Airlines, DAL, they're off $1.19. Western Digital off $1.15. Our call number is 877-927-6648. If you are listening in on the radio or your mobile device at tfnn.mobi, remember you can always catch this show streaming live to your smartphone device, your pad, by going to the homepage of tfnn.com. Over on the right-hand side, you'll see a button with 3 little smartphones. Click on that. This show will stream live to you. And as well, you can catch the archive of this show on Channel 10. That way you can take a look at the charts. Let's go start off taking a look at the indexes. One day bullish, the next day bearish out here. Well, yesterday was the bearish days. You had the bears coming back from the holiday session, forming a bear sash candle inside the S&P 500, and today getting the bull sash out here. So the bulls and the bears just slugging it out there right now. Resistance would certainly be, well, if you take a look at resistance, just look how close we are to 1576.09. Come on, I'm pulling for it to hit it, and give us a sense of, are you going to break through that old resistance level, that being the swing point from October 11, 2007, to close below, a test of 1576.09, meaning it's got to at least get to 1576.10 and a close back below it. That would be a rejection of price. That would be a rejection most likely on the volume. We won't know that till the end of the day. However, you get a close above 1576.09, and just like the Dow, which has moved higher, just like the Russell 2000, which has moved higher, just like the NASDAQ, which also has moved higher above its 2007 lows, or 2007 swing point, I should say. You may have the same thing going on inside the S&P 500. It's all about the S&P 500 right now to give us any kind of signal out there. 1576.09, that is the watch that we're on. Little bullish candle that we are seeing out here today, but we've had the bulls and bears duking this thing out really ever since, well, the first time you saw the bears truly show up on any single day recently was on March 21st out there, and then yesterday. That is on the S&P 500. Let's go check in on the Russell 2000 index out here. Give me a moment. We'll pull that chart up on the screen. The Russell 2000 yesterday having a horrible day. One of the bigger movers to the downside yesterday, setting up an evening star reversal candle. That is a 3-candle pattern out here. So with the lines have been drawn in the sand with regard to the Russell 2000. In fact, let's go ahead. I'm going to just clean this chart up here on the screen. That way, if you're following along at home, makes it a little bit easier. In fact, let's go ahead and get rid of the EMAs as well. Let's get rid of everything. Let's just clean this chart up here. Well, I don't know if I want to actually do that. Let me see. Let me pull this chart back here. Yeah, we'll go ahead and get rid of everything. We'll just clean this thing up here. You can always add the indicators back. So now we've got a clean chart out here. We'll go ahead and blow that up. And let's take a look at the first line that we're going to draw across the screen here is the resistance level of March 15th. That high out there. Let me first just draw this in red. There we go. Let me see. There we go. So that's drawn in red. 954, even Steven, March 15th. That set up a 3-candle reversal signal out here. That also being an evening star formation. That little bear sash candle as well that took place on March the 21st, but that really not setting up a resistance level. And then we have this 3-candle formation. This was the Wednesday, Thursday, and Monday session out here. So these 3 candles referring back to March 27th, March 28th, and then yesterday, April Fool's Day. I don't know, was it the April Fools? Was it the Bears giving you the April Fool's joke out here? Well, inside the Russell 2000, whether they were or they won't, you can see that you've got resistance out here inside the Russell. So this is going to be an important chart to be paying attention to as well, because if the S&P were going to break above that 1576.09, you'd want to see the Russell 2000 also participate in that move. So right now you've got 2 evening star reversal patterns out there named after Oda Nobunaga, and we've got an Oda Nobunaga inside our Tiger's Den out there. And if you haven't tested over the Tiger's Den, go to the homepage at tfnn.com. You can do that for 30 days, and it's a great way to just simply upgrade the folks that you hang out with on a daily basis. Great group of human beings, traders, guys and gals, tigers and tigresses inside the Tiger's Den and inside the Russell 2000. We know where the bears are hanging out. They cannot hide out there. So that's on the Russell. Let's go take a look at, what do we want to take a look at next? How about the New York Stock Exchange out here? Let's go take a look at the NYSE. Now, the NYSE really struggling yesterday as far as advancers versus decliners out here. The New York Stock Exchange, though, did not give us a bearish reversal signal yesterday at all. Looks like a hammer candle, smells like a hammer candle, but that is not a hammer candle yesterday. There was not that was coming as the market was moving up, not the market as it was moving down out here. Right now, resistance inside the New York Stock Exchange just really being set up here by the swing point of March the 15th. That high out there is 91.28. The low of that candle is 90.91. You're trading at 91.0540 right now. So trading back inside there. Of course, you closed back inside there yesterday. A black line going across my screen. That takes you back into August 16th of 2007 out there. So no real bears showing up in. Well, the bears were under the covers inside the New York Stock Exchange yesterday when you took a look at the advanced decliners, when you took a look look at the summation index, which was pointing down inside the New York Stock Exchange. Let's go take a look at the composite out here. The composite showing us that nice 3 drive to a top pattern. In fact, that 3 drive to a top pattern was provided to us by Z in the den. He was noticing this. This is the daily chart that we are taking a look at. You had the bears show back up for work in a big way yesterday, forming another bearish engulfing candle. Yes, I said another bearish one. If we take a look at it, the first one that we're referring to right up here at about the point where that 3 drive to a top pattern formed was on March 15th. That high, 3260.62 pennies. Right now you're trading at 3260.61. 0.62. How does that work? Just as if on cue out here. So that is a beautiful thing. Then yesterday you formed another bearish engulfing candle. So we got some very strong resistance areas to be paying attention to, which is very nice because on any breakouts, you break above resistance. Old resistance will become new support. That is not what we have here just yet. So resistance now truly inside the composite is going to be your high of 32.70.30. That is the high from Thursday out there. Right now, again, trading at 32.60.78. So you've got that 3 drive to a top pattern in place inside the composite. Let's go take a look at what index should we take a look at? Oh, let's go take a look at the SOX. The SOX yesterday, the chip manufacturers struggling out here. As we peek in on the SOX right now, we can see it's trading out at 427.75. Let me move this first line of support out here. Let me move that off to the side. So the semiconductors not celebrating in this move out here with the Dow up 78 points and the composite up 22 and the S&P up about 8.5 points. So the semiconductors are saying not so fast out there. Yesterday, forming a bear sash candle out here. So you've got resistance. You've got resistance certainly at the swing point for March 14th. Now you've got resistance out here at the high from March the 28th from Thursday at 437.06. And you're trading down into that first level of support. That first level of support really is broken. In fact, we'll go ahead and get rid of, I won't get rid of it. We'll just leave it out on the chart here. It's really this next level of support that's going to be the key area, and that is going to be where the SOX had gapped up. We're taking you back to March 4th. The high out there, 424.63. That window still not repaired. However, right now you've got the SOX trading back below the first level of support out here, back below the March 5th lows, which were 428.09. So the SOX, the semiconductors, are not participating in this rally out here. Let's go see what else is it. What did we, we didn't take a look at. How about the transports? Let's go take a look at the transports. I did say yesterday, I think it was yesterday we were taking a look at it. The transports being also key to getting some kind of signal with regard to the marketplace. So let's move this hammer down here. Let's adjust where I go ahead and actually place that hammer. So we'll put the line out here. That's going to be at the top of the frame. So there's our hammer candle. We'll go ahead and draw a line across here. The transports are also saying, just like my good friend Lee Corso, not so fast. There's that hammer candle from March 27th. Looks like that low is going to be tested at 61.18.29, but the transports are not coming along. So the transports are not transporting the semiconductors, or really this market. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Master Show, folks. Dow is up 82 points right now. S&P is up 9. Just peeking in on the ES Mini 30-minute chart out here. I've got a black horizontal line going across our screen. That was a small area of resistance out here. You can see the ES Mini is trading above that level. Really set off. We're using the shooting star that came in at 8 o'clock in the morning on April the 1st. That was yesterday out there. You can see a level that here that had acted really as resistance. Just take a look at a number of little touch points we can see coming in that 10 o'clock session with some decent volume, high relative strength. Now, you can see the RSI is up in the 76 level. I would love to see a push right now, right during the next hour or so, just to keep pushing higher, get into the swing point high on the S&P 500, and then go ahead and give us some information out there. Of course, we took a look at the transports, we took a look at the stocks, and they certainly are not confirming the move that we are seeing in the marketplace. Let's go take a look at some of the stocks that are popping and dropping. So let's go peek in on Apple. Let's see what Apple is doing. It is trading up here this morning. So let's go see on the daily chart if there's any volume or anything behind this move here in Apple. So let's pull this over here. What is that volume bar out here from a couple days ago? Let me refresh my screen. There must be something that isn't right because I don't remember that kind of volume anywhere. That is odd. March 29th, 56 million shares. I don't know what that is all about. So that makes this somewhat unreliable. If we take a look at today's volume, we got 5.6 million shares yesterday to the downside, 13 million shares. Still really coming back into the recent swing point, which was down here on March the 4th. That had 20 million shares. So 20 million, you're coming in with 13.9. You were coming in light out there. Apple trying to form some sense of a bottom here. You've got a little bit of a area where you've got the tug of war going between the bulls and bears. Let's go peek in on Google, see what Google is doing here this morning. Google trading out at 806.59. Google here had come down and tested its most recent breakout level. What I'm referring back to, it gapped up here on March the 5th. Did that with 4 million shares. That trading session for March 4th, that had 2.7 million shares. And then a little bit of just a junior swing point. Really, the swing point that it's trading into is February 26th. 2.2 million shares out there. On Thursday, Thursday's candle came back with the same kind of volume out here. Yesterday, if we take a look at Google, again, GOOG, is the ticker symbol inside there. Yesterday, no real bullish candle, but today gapping up here. So yesterday's volume, 1.8 million shares. It did also test the the February 26th swing point on lighter volume. So Google here rejecting lower price. That's what's going on there. Let's go take a look at some of these other stocks here. I did mention, let's go take a look at, let me see if I can find it here. Oh, did it drop off my screen? It was that E something. Let me see if I can pull that down here. EHTH is the ticker symbol. So let's go let's go EHTH. It's a health stock. It is up about 20%. 15% here this morning, up $2.76. Okay, I wanted to see what all of the fireworks were about, but oh my goodness, take a look at this stock. If you're just listening in on the radio, the symbol that we are looking at is EHTH. And it is one of the big movers here this morning, but it's moving into a huge downdraft out here. Take a look at this. Now, it's got decent volume, no question about it. It's got volume of, decent volume for this stock. 482,000 shares, taking out a swing point that has 422,000 shares. That is March the 20th. So it is confirming an A to B equals CD up. But look at this wall that it is moving down into. In fact, on February 19th, you had 2.7 million shares to the downside. That's after gapping down the day before with 895,000 shares. So this thing is really, let's see where the A to B equals CD could take you back to in this equity. Boy, what a nasty thing, this stock chart. You go back to 2007. We talk about our markets here being up towards their highs. This thing back in 2007, it takes you back into November of 2007, was up at about the $37 level. It made a run back all the way down in 2008, down to $8.70. Only trading at $20 here right now. But let's go take a look at the A to B equals CD that this has formed. Your A point on this is going to come in down here on March the 1st. That low is $14.85. After the next candle after that low, you had a nice bullish engulfing candle out there. 877-927-6648. When we come back, we'll go finish off the analysis of EHTH. Give us a call. We can look at your stock as well. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of tfnn.com.
Welcome back, folks. Dow is up 75 points right now. Composite up 20. We're taking a look at the stock EHTH here, gapping up this morning, doing it with volume, taking out a B point with volume, of course, running into a downdraft and running into a area that should have held as support, and that was the hammer candle. This formed a nice hammer candle on January 10th. Then you had a nice little bull sash, bullish engulfing style candle on the following trading session. Of course, what this was also really running into were some several here gap downs. You had one on January 4th. You had another on January 7th out there. So even though you had a bullish candle, that bullish hammer candle on January 10th, you always have to look to see where resistance is, and this thing had resistance all over the place because of those open windows, because of those gaps down. Of course, you break a hammer low. If you're long, you're wrong, and that certainly proved to be the case in this equity here, EHTH, as it broke that low of 22.35, which was from January the 10th out there. Did it with a wide-ranging bar on February the 15th. A to B equals CD, though, is what it's doing here on the way up, 21.93. Now, this is the way you want to come off of a C point. So it has come off of the C point nicely here, doing it with volume, explosive. Ordinarily, what I would say is this is going to do more than a 1-to-1 A to B equals CD. More likely, get up to about that 1 to 1.618. It ought to find a little bit of resistance here as it comes into that old support area of our hammer candle above 21.93. 21.93 is your 1-to-1 A to B equals CD. The low is 22.35 on that hammer candle. So, expect a little bit of resistance up there, a little bit of turbulence. But this thing really ought to be able to make it now up to the top of the gap from February 15th, maybe even try to close the gap where it should run into some real resistance at about the low of December 14th, $24.94. That is ticker symbol EHTH. Let's go take a look at some of these other equities here that are popping and dropping. We've got AutoZone zooming along. They have snuck into first place. So let's go take a look at AutoZone. AZO is the ticker symbol. They are up $7.46 here this morning. All I can see is that they've announced some kind of organizational change out here. But let's go see what this equity is doing. It is up above. It got up above an area of resistance here a little while ago. Well, that's the red line going across my screen out there. Yesterday, it formed a little bear sash candle. So it's up against another area. It's up against another resistance level. The first resistance level, what we're going to take a look at here is this red line on the chart going across the screen, really set up by the highs going back to May 16th of 2012. So 389.89 had acted as resistance. We see some bearish candles along the journey here back around June the 7th. Gets up to a high of 391.90, but you can see if you draw that horizontal line across the screen how price was contained within inside this area, even on a day such as November 27, 2012, as it opened at 382.38, got about $6, $7, $8 higher as it moved to 390.11, and then just simply sold off. Actually, the high was 390.11. The open was 390.11. My apologies. November 27th, it sold off right from the get-go, ran right into that resistance line as well. Old resistance becomes what? Becomes new support. And in this case here, the equity on March the 13th got above that level. It got above that level, did it with 383,000 shares. That 383 going against 336, not too bad. That was a sell-off day from November the 27th. Also got above it with 429,000 shares on June the 7th out there. So he didn't totally take that area out with volume, at least not on the trading session of March the 13th. But you had 400,000 shares on March the 15th. We can see how it gets above a resistance level, came back, and it's tested it here for about 4 or 5 trading sessions. March 19th also traded it right here, tested it, I should say, right here into this, what looks like a hammer candle. It's not as we blow it up. It certainly has that look of a hammer candle. That was the March 26th level, but you can see some additional tests, and those tests were on lighter volume here. In fact, the final test, March 27th, 189,000 shares. So this thing is now broken above a nice area that was resistance that should hold as support, just as it has proven it. Now what we're seeing is AutoZone take on its highs out here. Well, at least the May highs. Yeah, in fact, those are the highs out here. So the actual high, let's see if that is, May 1st was 399.03. 399.03 is 399.10 on April 30th. 399.10 on April the 27th as well. So you're above that area. Let's take a look at the volume back during those trading sessions. You'd go with how about that? Not much volume at all. 436,000 shares, I believe, is the big number. That is on April 27th. So that's 436,000. And today so far, 116,000 shares. So only an hour in trading, and AutoZone is certainly busting out its highs out here. So as we take a look at this here, let's go put this on a weekly chart. You can also see not in the overbought condition whatsoever. So it's taking out some nice resistance areas back here as well at these highs. We had this nice little bearish engulfing candle as well. So the bears were camped out on May 3rd of 2012. But let's go take a look at the weekly chart here. Let's go see on the weekly chart inside here if this is up over any bearish candle configurations as well. Let's get rid of this short-term rise, descending price channel that it broke out of the week of February 8th, 2013. Came back and tested it several times, as you can see out here. But let's go and start taking a look at horizontal areas out here, horizontal resistance, and no real bearish candles. candles. This candle right here on the trading session, the week of May 4th out there, no bearish candle. Now you can stitch these 3 weeks together to form your bearish candle, and that is an acceptable way to take a look at the resistance. Your real resistance out here on the weekly chart was right up here. You had this little bearish engulfing candle. You had a little what looks like a dark cloud cover candle that took place the week of November 9th. But we'll take a look at this one here. Let me draw the straight line. So on the weekly chart, you can see really it was busting up over resistance as well. That's what you want to do. You want to go take a look at the daily charts, the weekly charts, and put them together. Volume on the weekly chart for AutoZone November 30th was 2 million shares, busted up over that level with 1.8. 1 million shares March 22nd. Last week was 1.3, so it's a shy on volume as it got over the resistance, but that's not such a big deal there. Should act as support now, which is 390.11, and the real resistance candle on the weekly basis is going to be, I would say, use the April 27th high, 399.10. That's got 2.4 million shares as it was coming in last week, which was a shortened trading session, 1.3, so the quick math on that says that's about, 350,000 shares. So certainly last week as was coming in, still coming in light. Take a look at this week. You'd like to see AutoZone, if you're inside this equity, get above these 399.10 level and do it with more than 2.4 million shares. What does that set up here? Boy, oh boy, take a look. This thing has really been kind of a rocket ship here. Pretty tough to put together the A to B equals CD pattern on this for sure. Let me just put this on the monthly chart as well here. And, on something like this, I would really hesitate to even put together a monthly A to B equals CD. So AutoZone busting out and leading the charge to the upside. Let's go take a look at the airline group out here. Looks like they are struggling this morning. ALK is the one dollar-wise to the downside. That is Alaska Air. They're down about $2.50, and that's off almost about 4% here this morning. So let's go take a look at Alaska Air. Let's start off by taking a look at the daily chart on the screen. What we can see here, gapping down this morning. We'll go take a look and see where the Bulls and the Bears are hanging out. But you can see moving down now, truly this thing has been traveling in overbought condition here going all the way back to February, the end of February, February 28th. So this morning, gapping down, doing it with 496,000 shares. That's after making a high. 2 trading sessions go with 622,000 shares. So what you're seeing inside Alaska Air looks to be some volume off of the top out here. Now, that's a dangerous thing inside this equity because as you take this daily chart back to your left-hand side and look for the high-volume day out there, high-volume days are where you're really going to be able to identify some support out here. Unfortunately, in Alaska Air, that takes you all the way back to November 30th, and that price point is $43. Trading at 60 right now, so $43.07 sticks out like a sore thumb out there. 1.9 million shares. Not saying that's where it is going to right now, but very dangerous when you are in a stock chart like this that continues to overextend itself, knowing that is out there. And on Alaska Air, ALK is the ticker symbol. I don't see any kind of news out here that is driving this equity lower. So it's got some volume coming off of the top on the daily chart. On the weekly chart, let's go see on the weekly chart if it was up against any kind of significant resistance candle-wise or anything. And let me refresh my screen here. Because that has a pretty large gap down. There we go. So I got rid of that because that wasn't real. And what we can see here is no real resistance here on the ride up. In fact, you don't see a bearish candle inside this equity. The only bearish candle was right here. The week of December 28th had a little bit of a bear sash candle, and then you had the bull sash candle right after that. You had a continuation pattern. This is the rising 3 here right now on the weekly chart. That taking place right here on January 11th. You can see this equity here moves higher. And take a look at those 3 little doji-type candles, those 3 little dojis inside the window of that body out here. And whenever you see that is you're looking for a continuation pattern. You got that anytime you get a close above the body candle from January 11th. That was the close of 46.84. Once you get a close above that, that is a continuation rising 3 candle signal out there. So that's what the candles, that's what the market, the message of the market, that's what they were telling you. Let's go take a look at the ETF structure here right now. We can see we've got the S&P right now trading up about 10 points out at 1572, 1571, 73, and the Dow's up 91 points. So let's go take a look at the ETF structure and take a look at what kind of volume we have so far with an hour and 15 minutes into the trading session. Let me just refresh my screen, make sure that we've got all of the active data. So far, 29 million shares out here. On the SPYs, the number is 157.52. That was a little twang in that voice there. Went to that little high pitch, which I don't really have much of a high-pitched sound inside my voice, but I caught it. Maybe you didn't. In any event, I digress. Let's go take a look at the SPYs here. 29 million shares in the first hour of trading as it moves into its high, its swing point from October 11th at 157.52. Your 157.01. You know, it looks like today is the day. Now, taking out its most recent swing point that has 126 million shares from March the 14th. So volume-wise, if I just do the simple math on that, not too bad. Has the volume to take out that swing point. It does not have the volume, though, to take out the swing point from 2007 as we pull this back here on the chart. I meant to write that down. I wrote it down probably on a piece of paper, not on my stock chart. So time to write it on the stock chart. I don't want to make the same mistake again. 233 million shares. 233,517 is the swing point high from October the 11th of 2007. So nowhere near that to volume, but where price closes today, that's if, in fact, that high gets tested. That will be all important. If you get above it, close below it, you'd have a failure on price and volume out here. So I'm just as long as I'm out here in the stock chart, I'm going to go ahead and put the volume right next to the price point that we're looking at. That way I don't have to get you sick as I go to the left-hand side of my chart out there. Okay, let me see if I can type here. So 233 million shares. That's really what it's going against, and no chance. Well, I can't say no chance. It's early in the trading session, but mathematically speaking, you'd need to see some big volume come in at the end of the day. So it doesn't have the volume, but it does have the price and should be able to get up to that swing point high. Let's go see if there's any volume here in the small caps. Let's take a look at the Russell 2000. Russell 2000, having some volume off of its highs yesterday. Down with 59 million shares, forming a 1 to 1.272 A to B equals CD. Let's go ahead and delete that A to B equals CD pattern out there. You can see traveling still below Johnny Cash's, or let's call it Basil Cash. How about that? Basil Cash, Johnny Cash, and Basil Chapman's 9-period EMA. So still traveling below that level. In fact, that has acted as resistance. The high of that 9-period EMA actually coming in at 93.90. The high so far today, 93.92 on the IWM. A volume behind this move here during the first hour, 14 million shares. So volume-wise, what could that, if you just straight line that out, that would be maybe about 70 million. Well, not too bad. Of course, it doesn't work like that. In the first half hour of trading is when you get a significant volume out there, and then coming into the last at least 15 minutes. 877-927-6648. Dow's up 95. Composites up 27. In the metals market here right now, gold trading off $18, silver down 49 cents. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Masters Show. We are in S&P Watch 1576.09 out there right now. The high so far intraday 1572.98, trading at 1572.75. Let's go down the street to Orlando to our man Rich. Rich, thanks for calling. Thanks for holding. How are you this morning?
Doing wonderful, Steve. How about yourself?
Excellent. Thank you for asking. You wanted to look at one of the home builders, I believe.
Yeah, Toll Brothers. It looks like we've had some higher highs and pullbacks with lighter volume, and I don't know, there seems to be a lot of characteristics there that might make it look worthwhile.
Well, you know, as we take a look at Toll Brothers, TOL is the ticker symbol, folks. I've got the daily chart on my screen here. Now, the lines that I've got going across, the horizontal lines, I've drawn 3 black lines there. And this stock here has a habit of forming morning star candle formations out here The first one that we're looking at as I go back on the stock chart is all the way down here at the lows in November. November 15th out here makes a morning star. That's a 3-candle reversal pattern out here. Then makes another one here, the trading session of December 14th. That means it had to take the day before and the day after in order to complete that pattern. And on the black lines, the next morning star, which is where it's really trading into right now, Rich, is the March 13th level. That level was tested and held, and it was, if we take a look at volume on that little swing point there, 3.3 million shares, and yesterday it was coming down with 2.1 million shares. So if you were going to take a stab at this, you've got your resistance areas defined pretty well out here. Now, below the morning star formation from March 13th, that low, which is 33.59, you have another level of support here, which is the January 2nd low, and that has 4.1 million shares. In fact, the top of that, the top of that was not tagged. So you had 3.3 million shares as it came back there on March 13th. See, where was the high volume day? And then yesterday was with 2.1 million shares. So you do have, some light volume. And if you were going to take a stab here, I wish that this thing were more closer to that 30 level on the relative weakness indicator, because, what it's really got is I see lower highs out here on and this is just simply coming off of the bearish candles that it's got from the January time frame out here. But, you could take a stab at this. And what you would do is just have your stops. If you got to close, I would say if you get a close below the January 2nd low of 32.97, then I would think that this thing would come all the way back to the December 14th level before it would really give you some information. And then you've got, and at December
30, it would be almost like 30 then.
It would, yeah. So you'd have to go ahead and take take your losses, your smaller losses, if it were to break through these support levels. So far, volume wise, you're right on that, and that it is coming back into some areas of support on light volume. I just hate seeing all of these bearish candles. You had one right here on March the 25th. You've got this gap down here, big gap down with some volume in this thing on February 20th, and you haven't seen any real signs of strength in this equity on any kind of bounces here. So it makes me suspect that this still wants some lower price out there. But you are right; it's coming into some support areas on light volume.
Well, and some of its contemporaries seem to be weaker. Lennar seems to be breaking down, and D.H. Horton. I mean, so maybe the 30 is more of the area to be looking at.
They've had really nice runs out here. In fact, on the weekly chart, what is nice is, if these things, what's nice about Toll Brothers is really the pullback out here has been on light volume. So, as the group, and it is a good idea to go look at the group, but as the group turns, this one would be a nice one to be taking a look at. All righty, Rich?
Okay, thank you very much. Have a good day.
You bet. Thanks for calling. Stay tuned, folks. Basil Chapman is up next. Then we do the options hour after Basil. Have a great Tuesday. I look forward to seeing you in the morning. Take care, folks.